It has been an exceptionally brutal year in the stock market. Major losses, panic selling, and everyone's blaming President Trump's tariffs. But here's what they're missing. The bigger the crash, the bigger the opportunity for you to get rich. This market downturn isn't a crisis, it's potentially a once-in-a-lifetime wealth transfer. And in the next 8 minutes, I'm gonna show you exactly how to position yourself to capitalize on it. What's up everyone, Eric from Market Dash here, and we help everyday investors build wealth through strategic market opportunities that most people miss. And right now, we're witnessing something that hasn't happened since 2020, a market correction that's creating massive buying opportunities for those who understand what's really happening with these tariffs. Before I break down exactly how to spot these opportunities, I want to give you immediate access to the same tool we use at Market Dash to find undervalued stocks during market panics like this. You can start your 7-day free trial of Market Dash right now by clicking the link in the description. You'll get our complete stock analyzer tool and 52-week low scanner. Everything you need to spot these tariff-created opportunities yourself. Try it for free 7 days and see what you've been missing. Link is in the description. Now, let's talk about what's really happening here. These tariffs aren't random. They're part of a strategic economic blueprint. The strategy comes from economics Steve Morin's approach, using tariffs as leverage to renegotiate deals. The core idea is simple but powerful. They need us more than we need them. Impose tariffs on products they desperately need to sell us, force renegotiation on trading terms, weaken the dollar strategically to boost exports, level the playing field for American businesses. But here's the catch, and this is where your opportunity comes in. Market hates uncertainty. So what happens? Stock price drops, sometimes dramatically, even for companies that will ultimately benefit from these policies. Listen, I've been studying market cycles for years, and there are 3 guarantees in life: death, taxes, and market cycles. Bear market runs about 11 months on average, with stocks dropping around 32%. Is it painful? Absolutely. But here's the kicker. Bull markets last over 4 years and bring gains of around 150%. So I'm asking you, are you willing to endure 11 months of the pain for 4 years of potential 150% gains? Right now, the fear and greed index is flashing extreme fear. But as Warren Buffett says, and yes, it's overused but true, be fearful when others are greedy, and greedy when others are fearful. This isn't just a theory. The wealthiest investors in history built their fortunes by buying during downturns. They weren't smarter, they were just more disciplined and understood market psychology. So here's our 3-step Market Dash strategy for capitalizing on this tariff-induced opportunity. Step 1, target companies at a 52-week lows. Look at these major companies hitting 52-week lows right now. Google, Microsoft, Nike, Dell, Marathon. These aren't falling businesses, they're temporarily mispriced by a panicking market. Step 2, analyze their true values. For each potential investment, you need to analyze revenue growth projections. I typically go for conservative 4 to 8%, profit margins, free cash flow, reasonable PE ratios. This allows you to calculate a discounted cash flow value and identify which companies are truly undervalued versus which ones are cheap for good reasons. Step 3, strategic entry points. Don't try to time the bottom perfectly. Instead, use cash secured puts to get paid while waiting for better prices. Implement a disciplined dollar cost averaging strategy. Focus on companies with strong moats and competitive advantages. Let me show you a real example using our Market Dash Analyzer tool. Google is currently selling at $150 right now, but based on conservative projection of just 4 to 8% revenue growth and 22 to 24% profit margins, our analyst shows a fair value range of $200 to $330. That's a potential 12.5% annual return over the next decade from one of the world's most large dominant companies. Same story with Nike, being down from $180 to $57, but with even modest 3 to 5% growth projections, it's showing a potential 14% annual return. These aren't random penny stocks. These are world-class businesses temporarily on sale because of market fears about tariffs. And our Market Dash tools spotted them immediately. But here's the truth, none of this matters if you don't have the right mindset and the right tools. Crashes don't destroy wealth. Emotional decisions do. If you're out there chasing hype, timing trends or letting CNBC dictate your strategy, you're playing the wrong game. The real wealth is built by thinking differently, going against the grain, and understanding long-term cash flow. That's exactly why we built Market Dash, to help you cut through the noise and find real value when everyone else is panicking. Here's what I want you to do right now. If you're serious about turning this tariff situation into millionaire moment, start your 7-day free trial of Market Dash using the link below. Use our stock analyzer tool to evaluate your watch list companies, find the best opportunities before the market recovers. As the market continues to react to tariffs throughout 2025, these opportunities won't last forever. Our tools are designed to specifically help you capitalize on these temporary mispricings. The question isn't whether millionaires will be made during this tariff-induced volatility, it's whether you'll be one of them. Try Market Dash for free for 7 days. Link is in the description now.